Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hahn, president of Pacific Private Money. Nam Phan is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. And today's trivia theme is entertainment. Mark, tell us what's going on in real estate.
Well, first of all, we're still doing this show on Zoom. And, interestingly enough, a lot of podcasts and shows, radio shows, even TV shows are being done on Zoom. And I'm just wondering, with the fast approaching California June 15th date, we could start getting together again in our Pacific Private Money studio, doing, because we've got some pretty high quality equipment that we use. And I guess the Zoom's not bad, but I just wonder, I don't know, how do you feel like when you hear, shows that are done on Zoom? Do you find it a little bit distracting? Have you kind of gotten used to it?
I've gotten a little used to it, but yeah, in the beginning it was a little bit more like, gee, can't they get these guys in the studio? Of course, if they're halfway across the country, it's a little harder, but we're not quite like that. That's definitely
it's really interesting. There's a lot going on, and I know you've been talking about this in prior shows, and it's been a few weeks since I've been on, but there's no surprise here. Anybody that's watching the paper, reading the paper, watching the news. We've got the stock market just continues to reach new highs again and again. Cryptocurrency took a stutter step last week, and Bitcoin seems to be settling around, right around 40,000 right now, down from 60, but up from 20 6 months ago. So you wonder, that's kind of an interesting play. And then real estate, of course, has several things that are impacting the market. First of all, we have interest rates that surprisingly went down again. Mortgage rates went down even after a report that inflation is on the rise. And again, nobody needs to have the news tell them that inflation's on the rise when the cost of absolutely everything is going up like crazy. The price of gasoline right now is up. The price of materials are up for construction. Pretty much the price of a lot of goods are up because of supply chain issues. And the good news about that is that most of the inflation due to supply chain issues very well may resolve itself in the coming months, because, one thing, if you're a student of economics, that, the market, typically self-corrects when something gets out of whack. And so when the price of a piece of lumber goes from $10 to $100, that's just something that, the market's not going to allow a certain aspect of the market to have those kind of profits. It's just, it self-corrects. And so, and what I mean by that is that other, businesses, entrepreneurs, people will take advantage of that, that market situation, come in, and generally speaking, it'll eventually drive prices back down again. I mean, competition and it was one of the great things about our economy is that it does tend to self-correct. But all that being said, since we generally on this show talk about what's happening in the real estate market, more specifically, we tend to talk a lot about what's happening in the residential real estate market. And since at Pacific Private Money, we have 4 investment funds that are all focused on various aspects of generally residential real estate market, whether it's purchases or construction, and we can talk a little bit more about that as the show goes on. But the residential real estate market, you've got the Case-Shiller report just came out for the month of March. And it takes a little while for them to compile all that information. But the price gains, I mean, no one would have predicted the year over year real estate price gains that we're seeing today. So in the month of March, the market of Phoenix led the nation with a 20% year over year increase in home values. Now, when you read the paper, oftentimes they'll say the median home prices are up, and those oftentimes will jump 15, 20%. But we're not talking about the median home price. The Case-Shiller measures cost per square foot, prices per square foot. It's a true indication of how home values have increased. And it's very rare to see the Case-Shiller index have a 20%, a city at 20%. San Diego was 19%. Which is really surprising. San Francisco's at 12%. Again, not expected. We didn't see this coming. And so you're starting to see articles coming out, and we'll talk a little bit more in the next segment about, what some of the press and realtor associations are saying about where home prices are expected to go this year.
Very good. All right. Here's our first trivia question. The theme is entertainment. In which film did Michael Douglas play the part of Gordon Gekko? Figure we start off with an easy one, all right? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. That is our question. In which film did Michael Douglas play the part of Gordon Gekko? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Stay with us. You are listening to The Best of Investing, and we are going to be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money. First trivia question was, in which film did Michael Douglas play the part of Gordon Gekko?
Wall Street.
Wall Street, that is correct. And before we continue on, I do want to make a mention here. Paleo Restaurant has been the premier Italian restaurant serving downtown San Francisco since 1990. And it's no surprise that it's been voted best overall restaurant in San Francisco by San Francisco locals. They recently went through a complete remodel and in a brand new and more modern space. Visit paleosf.com. That's PALIOSF.com and make your reservation today. All right, Mark, why don't you continue on? You were talking about Case-Shiller and what we're expecting.
Well, so home prices are up quite a bit. People are wondering, is real estate now starting to enter into bubble territory? And 6 months ago when we were talking about rising home prices due to lack of inventory, low mortgage rates, lack of building during the pandemic, there really wasn't a feeling or a belief by many experts, not that there weren't people saying, oh, we're in a bubble, there's going to be a major correction. But the people that I follow and whose opinions I trust were saying, 6 months ago, we're not in a bubble. This is what happens when you don't build homes and when the price of money is as cheap as, 3% or less. Today, however, the consensus, well, I wouldn't say it's swinging, but there is, when you start seeing several months in a row of double-digit annualized home price appreciation nationwide, now all of a sudden we're going, okay, what's going on here? And I just mentioned the Case-Shiller index, saying that in fact I'm looking at this summary of the top 20 cities that they follow. And in fact, all but one are up double digits.
Wow.
So all but one of the major metros in the U.S. are up double digits, 11, 12, 14% year over year price appreciation. So the author of the Case-Shiller Index, Dr. Shiller, actually was interviewed this week, and for the first time said he was concerned that there would be a substantial correction coming in the real estate marketplace. Now, of course, nobody has a real crystal ball, and certainly when you see where prices have been heading, one should be concerned that especially if you're investing in real estate, if you're buying real estate for investment purposes today, are you buying at the top of the market? And I think we all know that there absolutely will be a correction. Yeah. The last one ended in 2010. So we're talking 11 years into this current real estate market. And
let me ask you, did he say that it was going to be widespread or certain pockets?
Nationwide.
Okay.
Nationwide. Well, there's always certain pockets. Yes. We will see. Yeah, when cities in Arizona are up 20% year over year, I would be concerned about a rubber band effect in certain cities like that. But again, there's just so many variables. We're not building enough new homes to sustain demand,
No.
and mortgage rates are still low. So there has to be a trigger somewhere, in my opinion, for the next down cycle to actually hit. But meanwhile, you've got millennials buying homes using the savings that they've earned during the pandemic as their down payment. You've got half of homes in the United States selling above asking price.
Yeah.
You've got days on market decreasing, and in fact, an article here on Redfin saying buyers in several states are snapping up homes in 5 days or less.
So it's not just California that has the overbidding anymore.
Right. Not just California. Overbidding is going on nationwide. Home sales are closing faster and faster. Bidding. In fact, here locally for us, we provide a lot of our potential borrowers with pre-approval letters, and many of them are just bidding, and losing those bids.
Yeah.
So just the mechanics of supply and demand and the cost of money right now, all of those factors would seem to support real estate prices where they are now. But, again, we just have to be mindful that, there's a lot of things going on with China, and a lot of things, something could happen with oil. There's just, if you look back on history, there have been a lot of various triggers through the years that have caused all of a sudden a stutter step in the real estate market and the economy. I don't like 20% annual appreciation. I would like, I was really looking forward to, before the pandemic, I was looking forward to several years of 4 or 5%, appreciation rates in California. That's a healthy marketplace. Anything above 10% is not healthy. So I'm concerned. And as lenders, we have to be mindful of that. So, when we do loans today at Pacific Private Money, we're always mindful of, what's the exit strategy? Is this a long-term loan, which would include even a construction loan? If you're funding construction loans today for a builder, and the price of materials is higher, if they're expecting to sell homes for a significantly higher price per square foot as their exit, now all of a sudden as a lender, you got to be concerned about that, because what if a year from now home prices are selling actually less price per square foot because of other market factors. So very, very interesting market right now. But I will say that at Pacific Private Money, we have never been busier. We are originating new loans at our highest pace in the history of the company. It's part of our growth plan, to grow the company statewide, and we're actually, dipping into other states. But all the while, we're working with investors and buyers of our notes that have a very specific credit box, and they're generally short-term loans. So, we're trying to, move within the market where we feel that there's enough. The exit strategy is short enough that we're really not worried that real estate prices will move that quickly. So even if a year from now home prices were lower than today, they're probably not going to be significantly lower. No one's predicting a crash in the market. In fact, real estate rarely crashes. It just, the last downturn happened to be a long 3-year protracted downturn that went longer and lower than anybody had ever seen before. But, generally speaking, that's not what happens historically in real estate prices. We tend to have a rather moderate dip in real estate values. So
yeah, in fact, when we get back, we'll talk about how your funds work and how investors can benefit by using those funds, even if the market does go down a little bit. All right, here's our second trivia question. Entertainment is the theme. What 1973 movie sparked careers of Harrison Ford, Richard Dreyfuss, Mackenzie Phillips, and Cindy Williams? All right, call 888-912-1190. And the first caller with the correct answer is going to win that Tanning certificate. Again, what 1973 movie sparked the careers of Harrison Ford, Richard Dreyfuss, Mackenzie Phillips, and Cindy Williams? All right, Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money. Second trivia question was, what 1973 movie sparked the careers of Harrison Ford, Richard Dreyfuss, Mackenzie Phillips, and Cindy Williams?
Oh, that was the Shot in Petaluma
Yes.
cruising.
Right. Come on. And Suzanne Summers was in the white car.
American Graffiti.
Yes, there you go. Hey, I figured as soon as I mentioned Suzanne Summers, you'd get that.
After that movie, we used to cruise 4th Street
Yes.
in San Rafael for the next several years. I had a hot Camaro with a souped up 327 engine. It was great. It was,
it's funny. I had a Z28 in 1980, so that was after that with the T-tops and all that.
Right.
Oh,
I had the
what a
T-tops
beautiful
too.
car.
Those were awesome.
Love that car. Yeah. All right. So, Mark, an email comes in from a listener, and it says, "How conservative are your funds?"
That's an interesting question, and we do get that from time to time. And I'd like to think, and I do, that we run our funds conservatively. And what I mean by that is, our funds basically have one of three assets: cash in the operating account, loans, and REOs, basically any real estate that we would have had to have foreclosed on. Now, most of our funds don't have much in the way of REO properties. In fact, we only have one fund that has one REO right now of the four funds. So we're running, when we make loan commitments, and I was mentioning this in the last segment, that we're trying to be mindful of the market. We're trying to make loans based on a relatively short payback period, generally speaking, a year, because we feel very comfortable forecasting forward 12 months, and that real estate values don't normally come down that significantly in a 12-month period. They might in 24 or 36-month period, but not in a 12. Also, with four funds, we have different levels of, let's just say, conservativism. So one might argue that our most conservative fund, Edward, would be the Pacific Southwest Fund, because the basket of loans in that fund have probably the lowest relative loan to value, because we're buying those loans at a discount. Now,
Sure.
Of course, these loans are on properties in Texas. Yep. So if you have, if you're accustomed to investing in California and you prefer California real estate as collateral, well, you may not be as interested in a Texas-based fund. However, the rate that we're paying right now in that Southwest fund of 7.5% fixed, that's a pretty high rate, given that the weighted average loan to value of that portfolio is about 40%.
Correct.
I mean, it's really, really conservative from that aspect. Now, the Freedom Fund, the Pacific Private Money Fund, the North Star Fund, those, we tend to regularly make new loans at around 70-75% loan to value. So in those funds, are those conservative? Well, if there's a fast payback and the borrowers have high credit scores, which they do, for example, on most of the loans that we do in the Freedom Fund, then yes, it's just it's how do you measure conservatism? Is it the quality of the borrower? Is it their FICO score? Is it the quality of the real estate? The marketability of the real estate being in the Bay Area in hot markets like Mill Valley, Tiburon, San Francisco?
Good question.
Is it the loan to value? So really, it's a mixed bag, and the great thing about having four different funds is that we'd like to think that we've got a fund for every appetite.
Yeah.
So it's important if you're looking at investing in a real estate secured fund, that you kind of investigate, what's the credit box that each fund is specializing in, what type of loans are they making, and what's that particular marketplace look like. And again, for more information, you can call us anytime. You can go to our website, of course, at pacificprivatemoney.com. Edward talks to a lot of our investor prospects, as does Nam Font. I don't talk to as many investors as I used to, thanks to the help from Nam and Mark, but I'm happy to talk to anybody. And we can be reached at, I always am. I love talking to people on the phone. 415-883-2150 is our phone number, but our contact information, the email addresses where you can email us. We have chat boxes on our website. Go to pacificprivatemoney.com. A chat box will pop up. You can start typing in there and get quick answers to quick questions. But for more information, reach out to one of us, and we'll be happy to send you more information, because I still think, notwithstanding everything that's happened in the marketplace, what's happening in the marketplace, and just the trepidation that some people are feeling about what's happening with home prices appreciation, cost to build. Let's not forget that homes and home ownership is still one of the most important things to most people in America, and particularly in California. We have probably one of the most resilient real estate marketplaces in the world here.
And I've got a deal of the week that's kind of typical of the kind of loans that we do. So lady owns a house free and clear for $3 million. She's downsizing to a property worth $1.7 million. She is retired and she wants to compete with all cash offers, and she doesn't quite qualify for a large loan. So what she's doing is she is getting a HELOC on the new property for $1 million, and we're going to provide a second mortgage of $500,000 on the new property, or excuse me, $700,000 to fill the gap on the new property, and cross collateralize on the current property. So we'll be amply covered on something like that. I don't even know what her credit score is at this point, and I don't care, because it's just a very, very conservative loan. And so we're expecting to charge her somewhere in the 8+% range and a couple of points. And that's those sorts of loans, which is the kind of loans that go into the portfolios of specifically the Pacific Private Money Fund. And that's how we can pay investors 7+% on that fund. So again, for more information, 415-883-2150. You could also go to pacificprivatemoney.com. All right, here's our last trivia question. Which two actresses on TV's Charlie's Angels were meant to be portraying sisters? Okay, so on the show, they were supposed to be considered sisters. Which two actresses are we talking about? Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Stay with us. The Best of Investing is going to be right back. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hanf, president of Pacific Private Money. Our third trivia question, which two actresses on TV's Charlie's Angels, you got to go back to the 1970s for this one, were meant to be portraying sisters? Now, what was the most famous poster of all time?
Farrah Fawcett was the blonde.
Yes. Okay, so she was one of them.
So probably not her. It must have been the other two.
No. But I mean, there was a fourth angel that came, who I think replaced one of them, if I'm not mistaken, or she.
All right.
Oh yeah, actually, you know what? I think she replaced Farrah Fawcett. Yeah, but they were supposed to be sisters. Cheryl Ladd was the other one. Okay.
Oh right.
Right. Go back to that. All right. So
I missed that one.
Yeah, Mark. Go ahead, Mark. What were you were starting to talk off air about it.
well, off the air, I was telling Edward that what I wanted to talk about on the next segment was I had a phone call with one of our associates, Tammy Blanchard, who her and her partner, Bill Aubrey, run our non-QM lending division, which we call Pacific Mortgage Capital. It's a new division that we launched about a year ago, and it's been gaining a lot of traction lately. And we have regular calls between Nam and I and Bill and Tammy. In fact, we had one this morning. And so Tammy was telling me that she had a client that normally would qualify for a purchase loan, basically, and we're not talking about a hard money loan here. We're talking about a relatively conventional priced loan for a purchase. But all of a sudden, the the bank was not approving it because he didn't quite have the reserves. Some of the money was coming was gift funds,
Yep.
and so she said, well, I'm going to use I'm going to have him do a one of Pacific Private Money's consumer bridge loans, short-term consumer bridge loans, to purchase the property, and then we can just go ahead and refinance him out, because the way that a lot of loan programs are designed, a purchase money loan is often harder to qualify for than a refinance.
Well, they figure if
She
you
said,
already got the loan,
right now,
then
right. So once you own the property and it's just a rate term refi, a lot of the conditions, including oftentimes reserves, at least for purposes of the refi that she
refi
could do
doesn't.
for him, didn't apply
Yeah.
anymore.
So how
So
much seasoning do they have to see on the old loan?
according to her, not many months. So again, there's so much competition right now. And there's so many different loan programs that you can, they don't, because some loan programs do have seasoning issues. Some loan programs do, or conditions, I should say, seasoning conditions. Some do have reserve conditions. Some have DTI conditions, but there are a lot of programs where various conditions are silent. They're waived. If you could match some of the other, oh, again, it's a mix and match thing. But I guess the whole point being that, we talk a lot about how a realtor or a mortgage broker can use our consumer bridge loan as a tool to help their clients get into the real estate now. And many of the ways and reasons they use it is to like compete with a cash buyer, right? By making a lower no contingent offer. And that's probably the most popular reason people use us, but that's another reason, the whole qualification thing. It's easier to qualify for a refinance oftentimes than it is to qualify for a purchase. So again, if the goal is to get into the real estate, get the property, capture the property, the consumer bridge loan, more and more, especially with what's happening today, is just a really powerful tool to help realtors, mortgage brokers, and of course home buyers, get the home they want. They can move right into it without having to sell their home first. There's just so many reasons why it's a powerful tool. And because of all the marketing we're doing to realtors and mortgage brokers these days, roughly 50% of the loans we're making today at Pacific Private Money involve a consumer bridge loan for one of those reasons.
And it's from the bank's perspective, I can kind of understand from a logistics standpoint where they say, well, gee, Mr. Borrower, if you already have a loan of $1 million at 8% and you're making your payment, well, then of course you can make your payment when it's only a 3% rate.
Yeah.
So,
the system is a game in many ways.
Yeah.
And even though logically you would go, why would I have to do this, trickery? Why do I got to use a high cost consumer bridge loan to capture the property? Well, look, we didn't make the rules.
Yeah.
And, banks are banks, conventional lenders, are what they are. And, the goal is to get the property and, buy the property you want today and compete with cash buyers. It's really interesting that it's come to this. And again, the prices for our bridge loan have come down. More of the loans we write today are at 8% versus 9%. But, one of the things that we have found for most of our clients who are using a consumer bridge loan to capture the property is that oftentimes the bridge loan pays for itself because of the savings they have from not having to move twice. Particularly when they have an existing home and they can move right into their new property and then go back with the property being vacant and do a nice freshen up, maybe even a remodel, stage it. They get a higher price.
Well, the other part too is that sometimes they can make a pretty aggressive offer on the purchase because you're able to close the deal so quickly. They don't have to do these, hundreds of thousands over asking. They can from the seller standpoint, it's like, look, we're gonna be able to get you your money in 2 weeks or whatever the period is.
Yeah. When we've gone back and analyzed many of the loans we've done for clients over the last year, our top agent has determined that most of our clients either make or save $100,000 on a $2 to $3 million transaction.
That's a lot.
And that's our average transaction these days. So it is. It's significant. So so when we say our bridge loans pay for themselves, oftentimes it's not just hype. That's real world. We have a friend, Edward, a mutual friend, that we helped him get into a lovely home in Marin County, right in the middle of a divorce, which was fairly acrimonious. The divorcing wife wouldn't sign on anything. And so he could not get bank financing because the divorce wasn't final, but he wanted to move out. And so we do quite a few of those. Again, it's a tool to help people get on with their lives. And he was able to, in fact, he's right now in the middle of refinancing that with a much lower rate mortgage now that everything's been finalized. So it's a lot of good reasons to investigate. If Wells Fargo, Bank of America, Citibank, Chase, if they turn you down for one of any reasons, you owe it to yourself to check out a consumer bridge loan or even a non-QM loan through Pacific Private Money or Pacific Mortgage Capital. For more information, go to pacificprivatemoney.com.
All right, stay with us. The Best of Investing will be right back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money. And we wanted to point out a couple of things here. So your flagship fund, the Pacific Private Money Fund, is what, about 62 million strong?
Yeah, roughly 62 million in investor capital.
And so far to date, no one's ever lost money.
No losses.
You have a preferred return of 7% plus, and the plus is because you split the profits, the manager and the investor, or the members of the.
Yeah, it's paying in the low to mid sevens right now, the Pacific Private Money Fund.
Okay. With all your funds, there's no fee to get in, there's no fee to get out, so there's no load. Two of the funds have no holding period. Two of them have a 1-year holding period. Okay. After that, for the ones that do have a 1-year hold period, clients give you, was it 60 days notice?
30, actually.
30?
Yeah, 30 days notice. And if the capital's available, we redeem them. If it's a large redemption, we may have to spread it out over a couple of periods. But generally speaking, we try to make it easy for people to redeem, when they want to. If the liquidity is there, we generally redeem them within 30 days.
Okay. And one of the easy ways that the liquidity shows up is you're doing short-term loans. The average payoff is what, 5 to 6 months?
Yes.
So, there's always money coming in, and you redeem people before putting that money back out again. So there's ample liquidity for the members if they choose to get out, which you really don't have too many people wanting to get out because you're paying such a consistent rate of return. Right?
It's interesting. Most new investors do spend, a bit of time discussing with us redemption policies, and they ask their questions. What if this happens? What if that happens? What if, is there any priority? And in one of our funds, we do have priority. If you've had in the Pacific Private Money Fund, if you've had your funds in there 5 years or longer, you do take priority. So there's there's that feature, and that's not uncommon among funds. But generally speaking, you're right. Once they've invested and they get those checks every month, we don't see a tremendous amount of redemptions. And we've been doing this at Pacific Private Money. We've had a fund since 2013. We've been in existence as lenders since 2008. So we're in our 13th year of operation. We have 4 funds now and 30 employees at Pacific Private Money. We have locations in Novato and Tiburon, and a number of new loan agents with us now down in Southern California. So we're looking down there to open up an office. So we're on a growth vector, largely because, we've just been very focused on products that are most helpful for realtors, mortgage brokers, and particularly the borrowers tailor-made for the California marketplace today and what is in demand. So it's just really, overall, it's we feel very, very bullish about the prospects for our company and its position in the alternative finance marketplace here in California. We anticipate a very, very good year in 2021.
Yeah, one of the benefits to your company is the fact that you're one of the few, not the only one, but you're one of the few lenders licensed in California to do these owner-occupied consumer bridge loans.
Mhm.
And when I've been talking to people, and they say, well, why aren't more lenders going in? And I said, well, it's a fairly expensive barrier of entry with the licensing and the
Yeah.
legal and the software and the continuing education and then just understanding this stuff. And a lot of lenders are out there and they're doing fine doing fix and flip. So why do they need to enter this space? So again,
Right. And we've been doing the consumer bridge loans for a long, long time. We started doing them immediately after Dodd-Frank was passed. And we've gotten really good at it. We've got a great crew. They're expensive to originate. That's why, but we now, with the volume, we do pretty well with it. So for more information, go to pacificprivatemoney.com.
All right, you ready? Here's our thoughts for the day. Singing in the shower is fun until you get soap in your mouth. Then it becomes a soap opera. Okay, and my son Luke loves that we named him after a Star Wars character. My daughter Chewbacca, not so much. I always laugh when I think about that one. All right, tune in next week to The Best of Investing. We'll be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.